Thank you for joining me for what I found to be a surprising buy signal. And we're just going to demonstrate that, as Jim Cramer always says on television, there's always a bull market somewhere. Now, if you want to stay up to date on signals in the global markets, please consider subscribing to my YouTube channel. In the meantime, we're going to get right to the signal here. And we have to point out and understand that good buys often require looking beyond the news. We often hear things like bull markets climb a wall of worry, or Warren Buffett's advice to sell when others are greedy and buy when others are fearful. Now, this can be good advice if you have a very long-term horizon. It can take years for investments to pay off, and that's probably the biggest challenge of being a value investor. Knowing that you're right, but having to wait 5 to 10 years for the market to agree with you. Now, there's also a risk involved, since the worries about a particular investment could prove to be well-founded. Investors don't always buy bargains when they're cheap. Sometimes they just buy hidden problems. So technical analysis can help with that. The idea is that momentum can highlight stocks or ETFs that are in strong trends. So you find the worry spot, and then you wait for momentum to say, yep, it's a buy. That strategy can decrease the risk of having dead money sit in an investment for years, because what you're seeing with momentum is that there's already buyers. Popular indicators include stochastics. Now, it moves between 0 and 100, but buy signals above 50 could be the best. Combining that with MACD, which moves above and below 0, just wait for the weekly chart to be above 0. Require both of them to meet significant hurdles before buying. So let's put it all together. Greece definitely presents a wall of worry. This is the long-term chart, and the Athens Stock Exchange benchmark is 85% below its all-time high. This has been a 20-year bear market, and it has been devastating for the country. It has just never been able to recover from that 2008 recession. But those worries are decreasing. This is a Bloomberg chart of bond yields. Greek bond yields on top, Italian slightly underneath. The two countries have similar fiscal constraints, so it's a good comparison. The spread, the bottom line, shows a decrease. It's a downtrend. When the spread between the two narrows, it's showing that investors are less worried as long as the yields are declining. So we're seeing Greek yields come down, the spread to Italian bonds narrowing. Worries are decreasing. There's still worries, but they're decreasing. Now could be the time to buy. For U.S. investors, the buy could be the Global X FTSE Greece 20 ETF. As we see, we have a buy signal now in stochastics coming above 50, while MACD is on a buy signal. The ETF has been jumping on news about the European Union election last month, and it's all coming together perhaps for traders. Should it move, a realistic price target based upon this pattern is 11, near those old highs. So that's a significant move for traders. It could be time to buy. GDP growth remains slow but above average. Elections likely to be held in July, so there's political hope that there's going to be change in the country. Technicals indicate it's a buy. This could just be the right time to get into this overlooked country. If you'd like to see more videos like this, please subscribe to my YouTube channel below. Thank you.